Mic check.
Morning.
Morning, morning. Do, 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 do. Sounds a little bit low. Maybe just a PC. Okay. It is 7:28. I did this yesterday, didn't I? But somehow, I don't know what tab it was on. This week. Reminding you how very, very unintelligent I am. Repeating the same thing. Anyways, good morning, everyone. Thank you again for joining my TED Talk. Today is Tuesday, August 5, and we will be looking at NASDAQ shorts. So, first things first, before I try to analyze anything, I am going to look for the objective that we've been talking about, which is Thursday, 2 p.m. open. That is the draw on liquidity since Friday. So we go, bam, there, close enough for comfort. And we go since Friday. Just beautiful randomness. It hits perfectly, stops, moving on. So now, a couple logical things should come into mind. As a curious, I'm not going to say student, I want to say person. How consistent is this idea of looking for 2 p.m.s open and blah, 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 right? That's logical. So let's go to Monday's 2 p.m. first, because as we start analyzing here, looking left, these are the levels that pop out to us first. 720 is going to get a special blue line. That's 720 open. Now, when we take a look at this delivery, post 2 p.m., we can see that the new day is in here, okay?
Recording in progress.
There we go. If we are of the belief, 720, now one of two things is going to happen. We're either going to expand outside the range or we're going to retrace towards the open of the day. We could eyeball and see that the open price of the day is somewhere down here, which would mean the current low of the day would sit at one of these lows or these relatively equal lows. So pulling that out, we can see that the low of the day was run. So this is the current low of the day. This, as the low of the day, will carry specific characteristics, namely, the current low of the day is formed by running liquidity. So this is a stop run. Current high of the day. Similarly, I'll be looking left, and I'd see this, I'd see that. And I would see that the current high of the day, again, is formed by running of liquidity. So the good book says whenever we have liquidity pools being run, PDRAs or order blocks in particular get formed. If there are PDRAs I want to trade off these levels, clearly we can see that there is no close above this to be used as an order block, and there is no close below this to be used as an order block. Also, we know 9 a.m. this morning there's going to be high impact news. So what are the chances that the market wants to present itself in a consolidated structure until that very, very high impact news happens? Quite likely. So we start putting together the components of under consolidated environments where do I derive information? That's going to be here. There we go. Thank you, David. David is my best friend. And we put that there. So this line is going to represent 50% of the current daily range. If we are eager beavers and are planning to trade, the first thing you want to look at is premium to discount runs here and there. If you are a process-driven eager beaver, then you look at the highest up close candle and the lowest down close candle in here, and frame those as the most likely areas that the market could ping pong, ping pong, ping pong, ping pong around. So from that point to that point, your lowest closing down candle body is this guy at 636. So a little bit of voodoo, the doll.
Never enough.
He's here. That's going to be my key level. This is the lowest closing this is the lowest closing down candle in a consolidation. Similarly, at the highest closing green candle body is this guy. So those are my key levels. If allowed, I will stock a short from here down into discount. And if I'm allowed, I'll stock a long from here into premium. This is sitting at equilibrium. And the good book says bulls buy low, bears sell high, pigs get slaughtered in the middle. So coming into the day with the expectation that we're likely to reach outside of this range or reach back inside in a consolidated environment, automatically says, once we're sitting at that red line, I do nothing. If it gets to any of these key levels, I will look for what information presents itself at those levels, and then I'll participate or not. If it sits here between now, assuming that we're still on the call at 9 a.m., then we will see. So the plan for the day is just what I just said. Looking for shorts up here, looking for longs down here, or sitting down until after 9 o'clock. There we go. Been coffee, extra black this morning, so it's not going to be fun.
Is that dread black coffee?
Yes, so I have some coffee from Hawaii that is supposed to make you smarter. Maybe that's not what what it does, but it's one of those coffees that are, better for your brain than regular coffee. So I am enjoying a cup
So
extra.
you're drinking squirrel shit, is what you're saying. You rich folks get bored too easy. You gotta go. You can't be eating that stuff.
I'm just a guy. I'm just a guy. So for anybody who does not have the wherewithal to sit and watch this and wait in real time, you could do what the most commonsensical thing, if that's a word, is set an alert at these prices, wait for the alert to be triggered, then look at your charts. But the folks like me who have a little bit more time on your hands, then we can watch and I'll happily entertain questions. If it breaks either side back. Yes, good job. So it's always a very interesting thing when breakaway gaps are expected, because you almost know when, where, and why they should print. First thing is, if you have a liquidity pool, exhibit A, and it gets taken, exhibit B, closing beyond the stop run is where you expect them to bag. Here go here and here. These candles that take the liquidity is where you expect your order block to form. But we carry very specific definitions for order blocks. And if there's no order block, then you call it for what it is. Neither of these runs close beyond the liquidity pool. So no big deal there. No big deal at all. If we were to look at this delivery in the sense of weekly profiles like we did, we can see this cup shape structure to mean one of two ICT weekly profiles, or maybe three. Let me just see. Yeah. Either Tuesday low of the week, Wednesday low of the week, or Thursday low of the week. If you're leaning on Tuesday, for example, it would mean you still want to see the market expand above these highs before you are fully convinced that lower prices are in. Now, 2 p.m. has been hit. And if you remember the charts that we're looking at yesterday, in particular, I drag this over here, or maybe I'll just show you the screen for a second. In particular, this one over here. We talked about Bitcoin breaking down, NASDAQ doing something like this. So now we've gotten that run, as unbelievable as it seems, because I know you didn't believe me yesterday. As unbelievable as it seems, we're looking for this to start showing elements of weakness. So, going back to the premise of what we were kind of sitting on, make this analysis stronger. If we have 720 starting here, and this is the last bit of price action before 720, and we have this here, it suggests to us that this is likely a Friday high of the week profile and the Tuesday low of the week, which means this new day, air quotes day, right? Just conceptualize. If this represents a new day and a new delivery, it would mean this daily high should not take this if we're bearish. However, this daily high can get taken afterwards, and then we go lower. So something that looks like this from a conceptual standpoint. Let me use annotate so I don't have to erase anything. We have a key level, and we have a Friday high of the week profile. When it breaks down, the things that are important are going to be Friday's daily low, and this daily high, which will be Monday, which means one or two things can happen. You get a Monday that stays inside Friday's range, so eager beavers can relax. The move is not yet there. Spike. Oh, Spike must be coughing. Slavic. Every time I cough, I spike, I say cough. Anyway, so looking for a Monday inside day profile. So that means automatically this high, this low, I want to see the bulk of the price action between now and here stay inside this. What does that mean for my trading? I'm likely not going to participate until very late in the day. After that time, what changes that protocol or expectation going into the day? Equities open, because equities open as spikes. And that spike can do either one of these. In this case, it is 50-50. Usually when you're looking at the equities open spike, there's information that leans on it is okay to accept the risk ahead of equities open because this direction is likely. In my humble opinion, for as long as we stay close to equilibrium, expansions to both sides is 50-50. If at equities open, we are closer to either this level or for some weird reason, we're above that level. I'm not expecting it to try to get back up there. Then I will favor a manipulative spike on the high first. But if we go into equities open and we are still closer to here, I do not know which side it's going to spike to first. And there's nothing here that lends well to the idea that one side is preferred. If I like a bias, I can force that on the market and say I could short IOFED there simply because I want to be a bear. But that's not me using analysis. It's me imposing my bias on the market. So, again, it is very, very rare when you don't have anything that leans on one-sidedness. This is one of those days. Yes, I have the levels I want to trade from. Yes, I have the levels I want to trade too. But the condition itself is not high probability. ICT month 1, elements to a trade setup. In this consolidated environment, that's the most important price level. We have shown willingness to put candles there and act as support, but this level has already been traded to. So imposing bullishness there or demanding bearishness is nowhere near 60%. Not even like there's not even 60% conviction from me here that this is one-sided. So again, this is one of those days where we don't have anything to do until at least equities open. So here's my suggestion. I'm going to enjoy my coffee. I am going to suggest that you leave this until equities open. Equities open, we'll pop back on the call and we will look at all the levels that we're looking for. And then within 15 to 20 minutes of equities open, we should have this market leaning one side versus the other. So again, I'm trying to share or keep you alive in August. And that is saying we leave this, don't even watch it, and we come back at equities open. Any objections? See you in 40 minutes.
No, sir.
Beautiful. Discipline over greed. This is not high probability. Getting away with an impulsive trade here is not process oriented. So With that being said, I will see you in 40 minutes or close to that. Leave this alone. My suggestion, you're free to make your choice, but I'm going to leave this alone. Finish my coffee, hit some push-ups, and be back at equities open. Please, I don't know. It's your choice, but just chill until equities open, all right? There we go. See you in 40 minutes.
I'll be back.